Welcome back, House Stackers. So glad to have you with us today. We're really excited for this interview. Damon, this is another gentleman. You've been talking to me for about a couple years, and so I'm really excited to hear his story and dig into his specific expertise. Damon, you want to introduce our guest today?
Yeah, Jim, I am excited to interview Jeremy Veldman, who I've met many years ago. When I was first getting started, Jeremy actually helped me buy several of my first investment properties. And what's interesting about Jeremy is that he's both an investor and a real estate agent. And so he lives on both ends of the spectrum. And you would think, more agents would be investors. But Jeremy knows firsthand, some of the challenges that investors face. And so today we're going to discuss, all the reasons why it makes sense to sometimes work your own deals as an agent. Jeremy's going to give us an update on the Memphis market in Memphis, Tennessee, where he lives. And so without further ado, Jeremy, welcome to the Stacking Houses Academy.
Thanks, Damon. It's a pleasure to be here.
Absolutely. So let's jump into this. If you would first, kick things off by explaining to our audience, how you first got into real estate and, what came first? Was it the investments or the agent, or how did you get involved in real estate?
Yeah, well, I come from the corporate world. My background is electronics engineering. I worked in Silicon Valley for 9 years, and it was a lucrative job and very prestigious. But after 5 or 6 years of hiring freezes, pay cuts, and layoffs, I realized I had to take charge of my financial future. So I have a background of living in Memphis. So I started researching the Memphis market. Long story short, I bought my first property in 2006. I still own it. Back then you could get basically 100% financed loans. So that's what I did when I bought my first property. All I did was pay the closing costs, no down payment or anything like that, and self-managed it for a few years, learned from the school of hard knocks, partnered up with somebody, bought some more properties. The market crashed a few years later. I got laid off and jumped in full time, and I became a full-time investor since in February of 2009. So I have not been a W-2 employee for 12 years, I'm proud to say. I function primarily as an independent agent right now, mostly on the real estate transactional side, but I still actively invest too. I buy and sell. I closed on one a couple of months ago. So I'm a trader and I'm also an agent.
Well, that's awesome. So, I know a lot of investors that are getting started, they're thinking about getting their license and, it may help save some transactional costs, especially on the buy side. They want to get access to the MLS, of course, networking. But how should our audience think about the properties that they own and maybe acting as their own sales agent? Are there pitfalls to avoid, or take us through, that kind of thought process, if you would?
I don't perceive any pitfalls other than when you're an agent, just disclose everything. When in doubt, disclose. Like if I'm selling one of my properties as an agent, there's a form that basically you fill out. It's a very simple form, and it's a state mandated form, TAR, Tennessee Association of Realtors, that basically says that I have an ownership interest in this property. In this case, I'm not only functioning as the seller's agent, but I'm also the owner of the property. And the same goes if I'm selling a property for one of my family members. So, there is some disagreement about this in the real estate circles, whether you should, if you're going to be a full-time investor, so to speak, do you want to get licensed or should you get licensed? And some argue against it because the argument is you can do certain things if you're not licensed that you can't do if you were licensed. I don't necessarily agree with that. As long as you disclose what you're doing and you follow the state mandated rules and the paperwork, then I don't necessarily see any downside to being a licensed agent. In fact, that would be the thing I would recommend first when you're getting started. If you don't know the next step, go and get your real estate license. It will give you access to resources, not only the forms and the documents, but also the network of other people who are actively in the business that'll really get you going.
Oh, that's great. Great information. And yeah, so our audience, just be careful, disclose, because it sounds like you will be held to a higher degree and maybe, some higher scrutiny, if you would, right?
Well, you're a fiduciary now, so you have a fiduciary responsibility to look after the interests of your clients. So yes, you are held to a higher standard, and there certainly is the the possibility of disciplinary or liability measures. But as long as you back everything up with paperwork and you dot your I's and you cross your T's, and it's not that complicated, it shouldn't be a problem. Bottom line, disclose.
Makes sense. Jeremy, you want to read us in a little bit on, obviously we're sitting here in our time of recording, 2021, just post-COVID. Memphis is a market I think has just been exploding for some time now. Just a little bit about some of the local economics of your real estate, portfolio, maybe personally, but also the city and the area, and kind of what do you see on the horizon for the real estate market there?
Well, 2021 is an unusual year. I mean, this year is an aberration in terms of what I've seen over the last 15 years of being in real estate. I've seen the long and the short of it. I mean, I was there in 2007 when properties would appraise for 70 grand. And then a couple of years later, you wouldn't get half of that because the market, tanked in certain areas. Today, you could sell those same properties above 70 grand. So, there's an old story about Manhattan Island back in the 1600s. It was bought for, I think, $16.73 or something like that. Somebody looked this up. Today, if you invested that money with compounding, you would have enough money to buy the island back. That's the power of real estate. So even if you buy a property and you get hit hard with a 2008 or a 2009, if you hang in there long enough, the value that you've seen plummet will come back and even go above that. And that's what we're seeing today in 2021. The investors that bought 12, 13 years ago, they got hit hard back then. They can now sell and recoup and probably make a profit on all of their losses, from when the market was hit hard from the 2008, 2009 financial crisis. But getting away from all that, in general, Memphis is a cash flow market because of the underlying fundamentals. Over 50% of the population here rents, which is unusual compared to the national standard. The numbers here make sense. You can buy quality, single family homes that still cash flow even after your debt service, your property management, and then factors for vacancy and maintenance. The city has some strong anchors. FedEx is here, International Paper is here, AutoZone is here, St. Jude. I just released an article on St. Jude. They're expanding and adding another 1,400 jobs. So those things tend to stay and really anchor a city regardless of what real estate market cycle you're in.
Oh, that's great. One of the questions that a lot of our students come to us with, especially as dynamic as the market is right now, is how to find good deals in a market like this. Given that you're also an agent, what maybe is some practical advice you would give to them?
Well, there's multiple ways for finding deals, and certainly, with the internet being so ubiquitous today, there are the traditional online searches. Any listings that are out there they're not only on the MLS, but they're blasted out to sites like Redfin and Zillow and some of the other ones, Realtor.com. I'm listing properties actively on the MLS now to get them sold, and I was not doing that 6 months ago. It's so active right now, and there's such a scarcity of inventory that there are multiple people who have a supply problem right now. So it just makes sense. Before I would pretty much exclusively market to my list, but now I'm blasting it out there to connect with other agents who are starving for deals. So when it goes public, it goes to all these different sites via syndication. So that's a great source. But there's really no substitute for having a relationship in that local market. Not necessarily another agent, but it could be a company that is in the business of supplying properties. We call them local market specialists. So these are full service companies that are in the business of actively buying and renovating distressed properties. And they take you through the whole process, from point A to point B. Point A being distressed and it needs a lot of renovation, to point B, fully renovated, tenant ready. They place the tenant, they do the management for you. And so basically you're just writing a check for the full suite of services. Now, if you're local and you can actively go through this process, yes, you can probably find a better deal yourself on your own. But if you're investing remotely, that's awfully risky to do. So if you're going to, if you don't live in a market like Memphis and you want to invest here, probably your best bet is still to get connected with a reputable turnkey / local market specialist company that is actively in the business. They have all the resources you need. You just plug into their process and their system. And, once your name comes up and they have a property ready for you, you just sign on the dotted line, wire the funds, and you're getting cash flow from day one. So that's still a great way to get going in the cash flow side of the business.
And you bring up a great point, Jeremy. And, for me, living in Houston, Texas, Houston's a great market as well. And we've had, a lot of our market is tied to oil and gas, and we've seen our own boom and bust cycles. But one of the things that was so alluring to me for investing in Memphis was the fact that it's really a cash flow city. And I have many, many properties in Memphis. All of them were bought through this turnkey process where, the houses were already rehabbed, tenant was in place, and basically I needed to close on the property in order to take over and start cash flowing. And then, part two to that equation is the fact that there was property management in place. So I know for our listeners that, may not be living in Memphis, may not, be even close to Tennessee, they may have some interest, but they may also have some hesitation on, how do I actually manage the property once I have it in Memphis? And it sounds like, Memphis is a great city because there are so many turnkey providers, and there are those reputable property management companies that can assist with newer investors, especially.
Yeah, absolutely. There's a lot of providers here, turnkey providers, and as well as property management services. And competition is always a good thing for you if you're a remote investor. So they want to step up. They want your property to perform. Keep in mind also that a property manager, by definition, has a fiduciary responsibility to maximize the cash flow for you, the property owner. It's not about the tenant. I mean, it is obviously, got to be kind of careful what I say here. It is about the tenant. It is about it is about their company as well. They're trying to make a profit. But ultimately, by definition, if you go to real estate school to get your license, when you study property management, the property manager has a fiduciary responsibility to maximize the cash flow for you, the property owner. And one of the providers I have a close working relationship with, they will actually raise rents on properties if they're not up to market standard. So I've had properties where they've raised my rent $50 a month or $35 a month. I've got one right now where I received a phone call a couple of weeks ago, and she basically said, we got to tick it up $150, $200. We may lose the tenant, but if they move out after the renovation, we can probably rent it for more. So they're looking out for you. If they're doing what they should be doing, their property manager, they should be looking out for you, not only collecting the rent, but making sure that the property is rented to market standards.
Good distinction. So I just want to be kind of cognizant of time and also give you the opportunity to give our audience, some sense of, some of the things that you're working on. I think from the agent perspective, you're working with a lot of sellers right now. Is that correct?
I am, yeah. We're in a strong seller's market. I've been contacted by a lot of people who want to sell, not just one, but anywhere from 1 to 5. They have small portfolios, and they're looking to cash in on an unusually strong seller's market, primarily to free up equity to redeploy into other investments. But yeah, everybody's kind of jumping on the seller's bandwagon right now. And markets go through cycles. I mean, there are buyer cycles like we had in 08 and 09. And now there are seller cycles like we're having in 20 and 21. So every roughly 10 to 12 years, it seems like we go through a full real estate cycle.
That's awesome. So Jim, what other questions do you have for Jeremy?
Well, I think, one of the things that might be interesting for some of our students is, Jeremy, I mean, fabulous story. If you go back to the beginning and had to give, 2006 Jeremy, any just kind of practical advice. I mean, you mentioned the power of getting your real estate license, but would there be, 3 to 4 other things that you would recommend to someone just getting started on their real estate investment journey?
Sure. Well, I didn't get my license until 2013. So I functioned exclusively as a non-licensed real estate investor for about 7 years.
Gotcha.
And I'll never forget the first conversation I had. I had to make a decision. It was really a leap of faith. I got pulled into this business, green as grass, no background in real estate. It was always something in the back of my mind that I kind of wanted to do, but I got a phone call from Robert Allen's organization. And Robert Allen, he wrote the book Nothing Down back in 1980, which was kind of the guide, if you will, for buying real estate with little or no money down. Okay, there's a lot of marketing in there, but one of the guys from the organization called me, and at that time I was researching tax lien certificates as a possible investment vehicle. I realized that they had a protege program on multiple streams of income, and it was a $13,000 investment. And what they did in that program is force you to write offers. You write a certain number of offers within a year. If you don't do a deal and make your money back, they will refund you the tuition. So that's kind of what pulled me in. I was going to prove to them that this doesn't work by writing a bunch of offers and then get my money back. But I was hesitant at first. And I'm on the phone with this guy. And of course, he's a sales guy. I get that. But he told me, the last thing he told me, and I finally made a decision to write him the $13,000 check. And that was a lot of money for me working a job back in 2006. He said to me, "You will never regret this, Jeremy." I look back now 15 years later, and he was absolutely right. The best decision I ever made was to take the leap and jump into real estate. And it's been a journey. I've gotten beat up along the way, but I tell you, it took me less than 5 offers to buy a property that I successfully flipped for a $25,000 check. And that's after making a lot of mistakes. I would have made a lot more if I'd done it right. But when you collect a check that's 25 grand in your hand on your own, flipping a property, and you're a rookie, that just really hits home the power of this business, how profitable it is. So the key is write offers and see a lot of deals. Write offers, that's what's going to get you active in buying properties, and then seeing a lot of deals. One of the advantages I have as an agent is I get to see a lot of properties and see a lot of deals, see a lot of financial statements. And that really helps me understand intuitively the performance of the market.
Yeah, that's great.
Well, Jeremy, this has been an awesome session here. You've provided, just so much, information for our listeners, and house stackers in summation, number one, it's great if you want to get your license, just be careful with some of the transactions. As Jeremy says, you want to disclose, because you are held to a higher degree, a higher standard. Number two, we've learned that, Memphis is a great city to invest in, and the demand seems to continue to grow month after month. It's crazy, the type of seller's market that we have right now. And then, finally, number three, Jeremy has no regrets, jumping into real estate, back, 15 years ago, and has never looked back. And I think Jim and I can resonate with that same sentiment, in that, it took a leap of faith. Jim and I were both, we're both ex-corporate guys that, transitioned to go full-time in real estate. And it's been the best decisions that we've made in our lives. So, Jeremy, we certainly appreciate your time. We also want to give you the opportunity to provide our audience, where can our audience learn more about you and some of the things that you're working on?
Absolutely. Well, I'm active in the Memphis market. I do have a website that's in development. It's simply jeremyveldman.com. The best way to reach out to me is just shoot me an email. I'm on Gmail, and it's just my initials, JR, which is my middle name, Ross, JR, and then my last name, Veldman, V like in victory, ELD as in David, MAN @gmail.com. You can look me up on Facebook also. Love to connect with you.
Well, awesome, Jeremy. Thanks again for your time. And House Stackers, I hope you just benefited from the tremendous knowledge that Jeremy just dropped on us here today. Stay tuned for some new interviews coming out. And with that, happy investing.